In this section, we'll go through the importance of the financial statements. So why are financial statements important? Well, there are many users of public company financial statements. For instance, we have investors. Investors will require financial statements to assess the performance of their investment and whether they should buy or sell their stocks. We also have investment analysts. These are outside analysts that want to see the financial statements in order to decide whether they should recommend the company's shares or stocks to their clients. We also have senior management of the company as users of a company's financial statements. For instance, management needs to determine their profitability, liquidity, and the cash flows of the organization in order to make the correct operational and financing decisions for the business. We also have lenders and banks as users of the statements. For instance, if a bank or financial institution is lending a company money, they need to ensure that the borrower will be able to pay back that loan. We also have rating agencies. Credit rating agency will need to review the statements in order to give an accurate credit rating to the organization. We also have government agencies. Depending on where the company operates, the government agency may need to determine the amount of taxes the company will be charged. We also have employees of the organization, as well as customers who will use these financial statements. In addition, we'll have suppliers looking at these statements in order to determine whether it is safe and viable to extend credit to their company. And lastly, we have competitors. Entities competing in the same domain or field will want to compare their performance to their peers, and the best way of doing that is looking at the publicly available financial statements of these other competitors. So what are financial statements? Well, the financial statements includes the face of the financial statements and the notes to the financial statements. So we have a balance sheet, which is also known as the statement of financial position. We have the P&L and OCI statement, also known as the statement of profit and loss or statement of operations. And we also have the statement of other comprehensive income or loss. We have the cash flow statement, which is the statement of cash flows. And we have the equity statement, which is the statement of changes in equity. Included in the statements are the notes to the financial statements. These are notes comprising the significant accounting policies and other explanatory information. And within the financial statements, we include the comparative information, so you can assess their performance on a year-over-year basis. The accounting framework to produce these financial statements includes IFRS and US GAAP. Starting with IFRS, this stands for the International Financial Reporting Standards, or IFRS for short. These are the standards and interpretations issued by the IASB, or the International Accounting Standards Board. For US filers, we have US GAAP. This stands for US Generally Accepted Accounting Principles, or US GAAP for short. These are now the standards and interpretations issued by the Financial Accounting Standards Board, or FASB for short. So what are the public company filing requirements? Well, in order to be publicly filed in the US, these are your requirements. You have an annual report, also known as the Form 10K. We have the quarterly report, also known as the Form 10Q. The regulatory body is the SEC, which is the Securities Exchange Commission. Then you have the stock exchange, where these shares or companies are traded at. And this is at the New York Stock Exchange. And the filing database, where these companies submit their filings, is EDGAR. And a lot of them also included in their investor relations section under their company websites. And the filing deadline for annual reports are 90 days, and quarterly reports are due 45 days after the period end. The filing requirements in Canada are very similar to the US. The annual report includes the annual financial statement and annual MD&A. MD&A stands for Management's Discussion and Analysis, which includes financial and non-financial information. There's also the quarterly report, which is the quarterly financial statements and interim MD&A. We have the regulatory body, which is the OSC, which is the Ontario Securities Commission. And the public company statements are traded. Public companies are traded on the TSX, which is the Toronto Stock Exchange. The filing database is SEDAR, and the filing deadlines are consistent and similar to the United States, where annual reports are due 90 days after quarter end, and quarterly reports are due 45 days after period end. In this slide, we can see the specific requirements for the 10K filing. We will be focused on item 8, which is the financial statements and supplementary data. This provides you the financial information and the financial statements of the organization. It includes the face of the financial statements and the notes to the financial statements, and gives you an accurate picture of the company's performance over the year. So what do investors look for? Well, investors look for growth opportunities, and the way that they do that is by assessing the company's profitability and future growth. To determine that, they also look at the quality of the balance sheet. Specifically, they look at the quality of the assets and the ability of those assets to provide a return to the investors. They also perform some trending analysis and patterns recognition in order to determine, is the company growing, or is it stagnating, or are they declining? In order to do this assessment of growth opportunities, investors look at key financial metrics. For instance, they go through the earnings per share. They'll look for that information, which is short for EPS. They'll look at the net income of the company to see, are they generating income, or are they generating a net loss? Is it growing, or is it declining year over year? They'll look at the gross revenues, and they'll look at the margins. Is the margins increasing over the year, or is it decreasing? And they'll assess the liquidity of the company. How liquid, how much cash flow does the company generate? Is it generating a sufficient and healthy balance of operating cash flows, or is there a going concern issue for the organization? They also look at the company's ability to pay dividends to its shareholders to provide a cash return on on investors' investment. And lastly, they'll also look at the leverage ratio. How levered is the company? How much debt does it have on its book relative to its asset position? So with that, in the future lectures, we'll go through the face of the financial statements and the notes to the financial statements and perform a detailed analysis of Apple Inc.
Thank you for watching. Check out the description below for more offers. Please like, comment, subscribe and share this video. Let's check out the next video in our channel.